Hey everybody, Smart Silver Stacker here. Hope you're doing well. The price of both gold and silver have come under some significant pressure this week following Jerome Powell's congressional testimony in which on Tuesday he told the Senate that interest rates may now need to move higher than previously anticipated. And this hawkish commentary from Powell triggered a sell-off in assets pretty much across the board, but gold and silver definitely were not exempt, and silver was one of the hardest hit assets of all. Now today, recording this video before markets open, both metals catching a slight bid. Silver is up to about $20.36. I think at the lowest point of the sell-off, it was down under 20 bucks into the $19 territory, but that didn't last too long. Gold is up to about $18.30, but there is some more short-term risk in the markets. In fact, there's a major development that will be occurring tomorrow, which I think could put some continued downward pressure on the precious metals. We're going to talk about that in today's video. Also, I'm going to talk about the long-term prospects for the metal and why I am still very bullish on both gold and silver. And it's not just me. There is a major player which just came into the markets and bought a lot of gold. So we're going to talk about that too. Today's video is brought to us by SD Bullion, home of the lowest price on gold and silver, period. You can check them out at sdbullion.com/new. If you're a new stacker, you can get your first purchase of gold or silver at spot. Now, let's talk about the major event tomorrow, which could threaten to put some more downward pressure on the price of the precious metals. We've got the jobs numbers coming out. The non-farm payroll report for February will be released. And if you recall, last month there was a huge beat of expectations. Now, a lot of that was due to seasonal adjustments and other twiddling with the numbers, making the jobs market look stronger than it is. A lot of it was part-time work. I think a lot of the jobs that were added in January probably were second jobs, but investors don't seem to care about that in this environment. They just take these government jobs numbers at face value. And so tomorrow, if we see a beat of expectations again, if we get a hotter than expected jobs number, that could absolutely trigger a further sell-off in the price of both gold and silver. Now, how far will they fall? I don't think that they're going to be headed any lower than perhaps the September lows, but that would represent a pretty big price decline from where they are at today. Now, I will be viewing that as a tremendous buying opportunity if it happens. I mean, it'll be a huge gift for stackers. And you got to think about this. If you're a net buyer of gold or silver, and I am, and I'm buying them for the long term, I'm not stacking physical metal with the hope of flipping it next week or even anytime in the relatively near future for a profit. The fact that the spot price will be falling, and it'll largely be due to paper silver contracts getting sold, is a huge gift for us stackers. I mean, that's just my take on it. I'm not telling you what to do. It's not financial advice, but if there's a big dip, I will probably be buying it because the long-term prospects for both metals, for both gold and silver, and especially silver, I think have almost never been stronger than they are right now. So let's get into that. Let's get into the long-term prospects for silver and why I'm still very bullish in the long term, regardless of what, the Fed does at the next FOMC meeting or what the next jobs number is. The data dependency, the claimed data dependency of these markets is really nothing but a hopeless addiction to the Federal Reserve's easy money and markets just anticipating what is going to come next from them. But in the long term, I think it's baked into the cake that gold and silver will be moving much higher. Now, one of the primary reasons that I have such a bullish view of the precious metals is the out-of-control debt situation in the U.S. I mean, there is, across all sectors of the economy, a tremendous problem with debt. This economy is massively overly leveraged. We've got $31.6 trillion in national debt now. And yesterday I was watching some of Jerome Powell's congressional testimony at the House of Representatives. So on Tuesday, he was interviewed by the Senate. Yesterday was the House. And one of the lines of questioning which really stuck out to me was Maxine Waters. Now, she started off her questioning by bragging about how the Biden administration has brought down the deficit by so much. Now, this is actually true in one sense, that the deficit now is lower than it was when President Biden took office, but you have to realize that the reason the deficit had gotten up to such astronomical levels by the time he took office was the pandemic era intervention and all of the spending that went into that. So the deficit was, although it's been high for some time, it was artificially very high when he came into office. So, I mean, yes, it has come down, but it's still officially over $1.4 trillion, and the real number is closer to $1.6 trillion. So, if you ask me, that's not really something to brag about, but it's kind of like when the Biden administration tweeted out that they were going to be overseeing the largest increase in Social Security benefits, but then Twitter fact-checked them because the reason that the Social Security benefits were going up so much was because they're linked to the CPI, and inflation was so high that they had to raise them. So, just more of the same. Another point that Maxine Waters brought up as she was questioning Jerome Powell, and she was really trying to pin him down about some comments that he made. I think it was at the last FOMC press conference where he said that Congress needed to raise the debt ceiling and that there was no other way to proceed. So Maxine Waters was trying to pin him down and get him to reiterate that point. It's a very partisan line of questioning. I mean, it's kind of what you'd expect in Congress, I guess. But one point she brought up was the risk of the U.S. defaulting on the debt and the fact that credit rating agency Fitch is now considering downgrading the U.S. debt. Now, her point was that Republicans' inability to agree on a debt increase is threatening the credit of the U.S. But my take is that, yeah, Fitch probably should downgrade the U.S. debt. I mean, it's crazy that the U.S., I think, has a AAA credit rating. I mean, who in their right mind would give a AAA credit rating to an obviously bankrupt institution? I mean, $31.6 trillion, absolutely unpayable level of debt, not to mention the 180 some odd trillion dollars in unfunded liabilities. I mean, we should have, a junk credit rating, basically. But of course, these credit rating agencies, they exist at the pleasure of the U.S. regulatory establishment and lawmakers. So there's no way they can really downgrade it without risking retaliation, at least not to the level that it should be. And if you've seen the movie or read the book, The Big Short, you'll probably recall that one of the big problems leading up to the 2008 financial crisis was that these credit rating agencies were giving a AAA rating to mortgage-backed securities that were nowhere near that level of security. And the reason behind that mislabeling of those mortgage-backed securities, at least according to The Big Short, was that the rating agencies, if they were to downgrade that, they would simply be out of business, and that the Wall Street institutions that were buying and selling these debt instruments would simply go and find another agency to give a better rating. So the credit rating of the U.S. debt at AAA is kind of a joke anyway. Now, in one sense, I suppose that U.S. debt should always be rated as AAA in the sense that it can always be paid off because we've got a printing press and they can always fire that up. But it's kind of like what former Fed Chairman Alan Greenspan told us in congressional testimony back in, I think, 2005.
We can guarantee cash benefits as far out and at whatever size you like, but we cannot guarantee their purchasing power.
Now, he was talking specifically about Social Security benefits in that clip, but I think the same thing applies to any obligations or debt by the federal government. Now, and of course, any scenario like that is as good as a default anyway, because if you are holding U.S. debt and you get paid off in worthless, devalued fiat currency, I mean, what is really the difference between that and a default? So, this is all part of the reason that I am still very bullish on gold and silver, because likely all of that debt is going to end up getting paid off in devalued currency, and the purchasing power of the dollar that is making those payments is going to be much, much lower than it is today. Now, another sign that gold and silver do have a very bright future moving forward is that institutions and central banks continue to gobble up gold at a record pace. Now, if you'll recall, 2022 was the year that central banks bought the most gold on record for any year. And these records go back to, I think, the 1940s or 1950s. According to the World Gold Council, more gold accumulated in 2022 by central banks than any year they've recorded. And it looks like 2023 is on track to be a new record-breaking year. The MAS, that's the Monetary Authority of Singapore, has now reported that they purchased 44.6 tons of gold in January. Now, they didn't make a big press release or anything. They just updated the information on their website regarding their gold holdings. And according to this tweet from Krishan Gopal, who is a senior analyst at the World Gold Council, net buying in January now has been revised to 77 tons of gold by central banks. So if you look at the chart there, you can see that while 2022 had the fastest pace of gold accumulation by central banks of any year on record, now January of 2023, with this upward revision to the numbers, is now the month with the biggest net purchases of gold, more than any month in 2022. So we are starting off 2023 very strong in terms of institutional accumulation of hard assets. And, central banks, say what you will about them, they're not what I would call dumb money. They know what is around the corner. They know inflation is going to get much worse. They understand that de-dollarization around the world is a tremendous threat to the purchasing power of the dollar in this geopolitical situation we find ourselves in, where a number of countries, such as China and Saudi Arabia, that have been very helpful in propping up the value of the dollar. China, by accumulating huge levels of U.S. treasuries and buying up huge amounts of debt. Saudi Arabia, by pricing their oil exports in dollars. Those countries may not be as accommodative to the dollar. And the purchasing power of the dollar, there is a real threat that it could be dropping precipitously. And so, yes, gold and silver in the very short term, they could be selling off more, they could be going lower, but I will view that as possibly the last hurrah for these lower prices. Now, I know anytime the price of gold and silver begins to drop, it seems to really bring out the trolls in the comments on these videos. But as for me, my conviction that precious metals will be a major safe haven in the coming economic crisis, which is, approaching rapidly, it has not wavered at all. And so I'll still be accumulating. I'm kind of holding off right now because I do think there is the potential, at least, for a further drop. Who knows? Anything's possible in the short term, right? I'm not claiming to be capable of timing these markets perfectly, but I do think that when we get the jobs numbers tomorrow, whether they're cooked or not, if they're better than the analysts expect, we could see a falling gold and silver price. But again, I will just view that as a buying opportunity. So let me know what you think about all of these developments down in the comments below. I always like to hear from all of you. If you like the video, please do give it a big thumbs up. Consider subscribing to the channel. Thank you very much for watching, everybody. I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.